Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon that might be hiding a story you need to know about. Today we're diving into a filing from Yum China Holdings Incorporated, and it seems like they're dropping some news about their yearly performance. So let's see if it is a hit or miss. Before we dive in, if you like getting the inside scoop on company reports like this, make sure you are subscribed to the channel. And for more in-depth discussions and to connect with other CFO wanna-bests, join our Discord community linked in the description below. Alright, kicking things off, we've got the official report date here, the 4th of February 2026. This tells us when the company is officially putting this information out there. Now this is a filing with the US Securities and Exchange Commission, or SEC, think of them as the referees of the stock market, making sure companies play fair and report their business honestly. This specific form is called an 8K. It is like a special news bulletin from a company. Companies use it to announce major events that shareholders and the public should know about right away. So this isn't just a routine update, it is about something significant that has happened. The company we're looking at is Yum China Holdings Incorporated. If that name rings a bell, it's because they operate a whole lot of popular fast food restaurants in China. We're talking KFC, Pizza Hut, and a few others. They used to be part of Yum Brands, the global parent company, but they spun off and became their own entity. So they're pretty much focused on the massive Chinese market. This 8K filing is pretty straightforward. It's mainly about announcing their financial results for the full year and also for the last 3 months of 2025. The key piece of information here is in item 2.02, which deals with the company's financial performance and overall health. So, on the 4th of February, Yum China put out a press release with their unaudited financial results for the entire year and for the final quarter of 2025. Unaudited means they've done their own calculations, but they haven't been given the final thumbs up from external accountants yet. This is pretty standard for these types of announcements. They're attaching this press release as an exhibit, specifically Exhibit 99.1. This is where the real numbers and details live. This exhibit is basically the whole story. While the filing itself might be dry, the press release is designed to give us the highlights. Since we don't have the full press release content here, we have to assume the filing is pointing us to significant news. Often, these press releases will focus on key financial metrics like revenue, profit, sales growth, and maybe some outlook for the future. For context, Yum China stock is traded on major exchanges. Their common stock, Yum, is listed on the New York Stock Exchange and also on the Stock Exchange of Hong Kong Limited. This means investors worldwide are watching how this company performs. The primary security we're talking about here is their common stock. This is what most everyday investors buy and sell. Being on the New York Stock Exchange means they have to adhere to some pretty strict reporting and governance rules, which is good for transparency. Scroll no, let's look at what these financial results might mean. While we don't have the full press release, these kinds of announcements typically tell us how well the company is doing in selling its products. For a company like Yum China, which operates thousands of restaurants, performance is often measured by same-store sales. This means sales at stores that have been open for at least a year. It is a key indicator of how popular their brands are and how well they're managing their existing locations. Scroll if their same-store sales are up. It suggests that more people are eating at KFC and Pizza Hut in China, which is a very positive sign. This could be due to effective marketing, new menu items, or even just the overall economic climate in China. A strong same-store sales number is often a direct driver of profitability. Scroll on the flip side if same-store sales are down. It could signal that the company is facing increased competition, changing consumer tastes, or perhaps economic headwinds. This would be a red flag for investors. Scroll beyond same-store sales. Companies usually report their total revenue, which is the total money brought in from all sales. They'll also report their net income, or profit, which is what is left after all expenses are paid. For Yum China, a huge part of their expenses would be things like ingredient costs, labor, rent for all those restaurant locations, and marketing. Scroll the filing itself points to an announcement of unaudited results. This means the numbers are preliminary. True financial success would be reflected in consistent revenue growth and a healthy profit margin. For example, if they reported a big jump in revenue but their profit margin shrunk, it might mean they're selling more but at lower profits, perhaps due to rising costs or aggressive discounting to drive sales. Scrollium China operates in a dynamic and competitive market. They are likely facing competition not just from other international fast food chains, but also from local Chinese food providers and delivery services. Their ability to adapt to local tastes and preferences, as well as navigate any regulatory changes in China, will be crucial for their long-term success. Scroll the fact that they are announcing these results in early February for the year ending the 31st of December is typical. It gives investors a clear picture of their performance heading into the new year. Scroll looking at the big picture, Yum China is a bellwether for consumer spending in China. If they're doing well, It often suggests that Chinese consumers feel confident enough to spend money on dining out. If they're struggling, it might indicate broader economic concerns. Scroll no, let's think about what could be hidden beneath these numbers. Companies often try to put a positive spin on their results. We'll need to see the actual press release to understand if the company is highlighting strong growth or trying to explain away weaker performance. For instance, they might report a slight increase in revenue, but if that increase is less than inflation or less than their competitors, it is not really a win. Scroll in terms of strategy. Yum China has been very focused on expanding its footprint and also on innovating its menu to cater to Chinese palates. They've also heavily invested in digital ordering and delivery, which is critical in the Chinese market. The success of these strategies would be reflected in their financial results. Scroll so to summarize. This filing is essentially a heads up that Yum China has released its year and financial results. The core of the story will be in the details of those results, which we expect to be a mix of sales growth, profitability, and how they're managing their vast restaurant network. Scroll ultimately. Yum China appears to be a company deeply tied to the pulse of the Chinese economy and consumer. Their ability to consistently deliver popular food at convenient locations while navigating a complex market is their core strength. However, risks like intense competition and potential economic slowdowns in China are ever present challenges they must manage effectively. The numbers released in their press release will tell us how well they've done in the past year at meeting these challenges and capitalizing on opportunities. Alright, that is our quick decode of this Yum China Holdings Incorporated filing. What is your take on their potential yearly performance based on this announcement? Do you think they're on solid ground or facing headwinds? Drop your thoughts in the comments below. If you found this breakdown useful, give this video a thumbs up and of course subscribe for more regular dives into corporate filings, and don't forget to join our Discord community for more discussions. Thanks for watching and we'll see you in the next one.